Welcome back, everyone. We've been away for some time. Back here to help unpack what's going to be the next wave of government initiatives from Rishi and his team as we start to come to an end of the first 6 months of very expensive government spending to help support us and all of you through what's been an interesting year so far. Let's kick off these slides. As Rosie said, we'll pick up most of the Q&A, I think, at the end. There's a lot of content for us to get through, but Rosie, if there's any specific stuff as we go through, and it's specific to what we're talking about and poignant, we'll pick it up there and then. So there's three main things that we're going to cover with some bonus stuff at the end. So the main one where we're getting questions in from clients already is about the job support scheme. So this is the scheme that's going to replace the very expensive but arguably very successful furlough scheme, which comes to an end this month. The self-income support scheme, which is more or less staying the same, but being extended for a third and looking like a fourth period. So we'll revisit what that is and how you qualify and what you get. Then there's been a number of changes to, a few changes to taxation. So VAT rates, timing of payment of VAT, and also timing of payment of self-employed income taxes in January. And there's been a few changes and extensions to the two loan schemes, so the coronavirus business interruption loan scheme, SIBLs, and the bounce back loan scheme as well. And we've also got two extra bits. So the Kickstart scheme, which on the whole is not largely targeted at SME audience, but there are ways to access it. And certainly we're getting questions coming in about how do we get hold and what is this Kickstart scheme? And then also our leader Boris Johnson is revealing to us each week another round of hugely complex things, which include local lockdown protocols, of which there's going to be government support to businesses that are caught within a local lockdown environment, where we see Liverpool there now, and presumably London will probably be there soon. And one of my business analysts, Dan, is going to help us unpack that and understand that a bit more. So let's kick on. So our job support scheme. So what's first? What is good to hear is, talking to a lot of our clients, a lot of you guys on the call today, and that I think most businesses that we're working with are coming to the end of their use of the furlough scheme, or have significantly reduced their use of the furlough scheme as of now, which is very encouraging to see. But we are going into a final quarter of the year, which we've got a very turbulent economy, very weak economy, and we've also got what seems to be in the media every day, the next big wave of coronavirus things happening. So there's a lot of uncertainty to do at the end of the year. So a new scheme to help move us on from the furlough scheme is much welcome. It certainly can't be as expensive and as generous as the first scheme. The country just can't support that. So the new scheme, the new support scheme, is based, is targeted at businesses that are going to continue to employ their work base, but for some, or perhaps even all of their workforce, they're going to have on part-time working hours. And the first rule of this scheme is that part-time working hours means no less than 33% of their usual working hours. If it is less than that, then they won't qualify for the support under this scheme. Okay. So if you do have an employee on part-time hours, so working 2 or 3 days out of 5 days, there's going to be a government contribution towards that, and we'll unpack exactly how that works in a moment. But the first headline is that government contribution will be a maximum, so capped at the precise amount of £697.92 per month. Okay, so let's unpack then how this is calculated and who needs to pay what. So let's just work. We've got a worked example here looking at the government paying out that maximum amount for an employee. So we're going to take an employee and we're going to assume they're earning £3,141 a year. Okay. Now, with our diagram to the right here, let's just unpack the different thirds about who pays what. So the first third, this percentage of hours worked by the employee. So if the employee works 33% of the hours they have, the company, the employer, is obliged to pay for those hours. Okay, so for every hour actually worked by the employee, you as a company will pay them their normal wage salary for that period. Okay. Now, the rest of the earnings are split up as followed. So if we take the next, sort of say that 1/3 is paid, the hours worked are paid by the employers, the other 2/3 are split up into thirds again. So the first part, 22, which would make up 22% of the whole, is paid by you, the employer. So you top them up again for the hours they're not working. The second third is covered by the government. Okay, so in this example, it's a maximum of £697 when you do the calculation. And the final third is covered by the employee foregoing their wage. Okay, so it has some similarities to the furlough scheme where the employee took a 20% hit to their earnings. They have to do a similar contribution here. Okay. Now it's also worth noting, unlike the very early furlough scheme, is that you as the employer, you're not only paying for the hours worked plus 1/3 of the hours not worked, you will be picking up the normal employer's NI and also the employer's pension contributions that you need to continue making over that period. Okay. So other parts. So how do we qualify and who's eligible? So much like the furlough scheme, it will be administered within or controlled within the PAYE environment. So it is for employees. So the employer must have a registered PAYE scheme and obviously a bank account to be able to make the grant. There isn't a requirement that you did use the previous furlough scheme, so you don't have to be registered with that scheme or have had any employees work under that before. But much like the furlough schemes, there is an important cut-off date that employers need to be employed by to be eligible for the scheme. So that date is 23rd of September. Okay, and as we learned from the first schemes, what that means is they must have been on an RTI submission, i.e. they've been paid, had a pay slip, and that pay slip has been sent, or the electronic data has been sent to HMRC by that date. If they're not, they simply do not qualify. They won't form part of HMRC's records, which shows who qualifies and who doesn't. And just re-emphasizing here as well is that employees must work a minimum of 1/3 of their usual normal hours. Okay, so if you have got someone working 1 day out of 5, they just won't qualify. So it doesn't tear down towards that. You simply don't qualify for the scheme. So you can see the government is trying to create at least a partial incentive to keep people doing as much work as possible, which is one of the criticisms of the previous furlough scheme, in that it incentivizes employers not to put people back to work. Rosie.
Yeah, we've got a question in from Raj Panasar, who's saying,
Hi, Raj.
what happens if they're working a little bit more than 33%?
That's fine. So the minimum is 33%. If we go back to the calculation rules, that one of our rules is that the employer, so you as the employing as the employing business, you must pay for every hour that they did work. So if they work 50% of their time, you pay for all of that. And then the bit that you're not getting, they're not being paid, you first work out the 1/3 of that is covered by the government, but maxed at the £697 a month. Okay, so if it's under that, they'll just pay that. If it's over that, it'll be capped at 697. And then the remainder is split between the employer, you, and the employee. But the employee has to earn at least 77% of what they earned before. So they use that calculation to work out what the employee would have to top up in that case. Okay. And I think for a lot of people, most people using this scheme, the employees will be working more than 33%. It's probably where you just don't quite have enough demand to have a full-time person there, whether it's a restaurant or a factory. It doesn't really make a change. That demand's not quite where it was. So you want to agree with your workforce that they pull back maybe a day a week. Okay. Other important features here The scheme opens from 1st of November and will run until April next year. We don't know yet whether it'll be extended or phased out like previous furlough scheme. Remember, we only found out towards the end of previous furlough scheme what was going to happen in the final 3 months. Payments will be made at the end of each month. So the claims will be made and payments will be made at the end of each month. So the claims for November will be made and paid in December, and December in January, and so on. And much like the furlough scheme, there will be a government gateway to run this through. We haven't got a lot of information yet about who will need to make this claim. Remember that under the furlough scheme, our payroll teams were able to assist you in calculating what was paid and to make the right submissions. And we know that was quite a difficult calculation depending on hours worked over a period of time, trying to work out what usual working hours and all that stuff was. So payroll teams, accountants were allowed to help. But under the self-employed support scheme, accountants were not allowed to help, and you had to go and make that claim yourself. We suspect that the accountants will be able to help because there are actually calculations that need to be made. And unlike the self-employed scheme, they don't have to be made. Okay. Other key parts. So much like the furlough scheme has been for the final 3 months, it will be flexible. So you could have someone working 3 days a week for a month, bring them up to full-time because, hey, we're a retail location, everyone's coming in and buying stuff for Christmas, and then it tails off in January. You want to pull them part-time again, you can do that. Okay, so you can move around with demand. But remember that minimum, that de minimis, the 33% still will apply. Okay. We've also had some questions around the furlough bonus scheme. So Rishi's bonus scheme for if you continue to employ individuals that were previously on furlough. What we know is that you'll still be eligible for that if you use this scheme. Okay, so this scheme doesn't count as redundancy or any change to employment terms. It counts as continued employment. Okay, and just a reminder, what that bonus is that if you had 3 employees that were previously furloughed, if they're still employed in your business at the end of January 2021, you get £1,000 per employee. Okay. Right, so that brings us to the end of that scheme. We can cover more questions then at the end as they come in. The calculations, I think, are relatively straightforward, but there are nuances when you get to reaching the maximum HMRC payout, which we can unpack again at the end if you want us to. So self-employed income support scheme. So on the whole, this scheme stays relatively the same. Just a reminder, this scheme is for those that are self-employed, and we'll look at some of the details in a minute. So over 50% of your income must come from self-employment. And self-employment, remember, is you're a sole trader, so you don't have any sort of legal entity and you earn income. You're a partner in an LLP or a traditional partnership. That's all self-employed income. Self-employed income is not dividends from a limited company or a small salary as a limited company. So if you are a owner manager, so a director of a limited company, this scheme is not going to be for you. Okay. So the last 2 rounds of this scheme paid self-employed people between 70 to 80% of their normal profits, with a cap at 2.5 grand a month. And this scheme follows that same sort of pattern, except that it's a lot less generous. Okay, so but for the 3 months of November to January, so another similar period to the last sort of rounds, your grant is going to be capped or limited to 20% of your monthly trading profits. And again, this is your average monthly trading profits. Okay, so there's a calculation that has to be done to do that. And the cap is also reduced at £1,875. Okay, so it's continued to help those people who are still struggling, but it's significantly less beneficial as the previous scheme. We also know that at the end of this scheme, there will be another scheme. This is what Rishi's told us, but we're to be kept in suspense of what that scheme will do and how much it will pay us. We just know that there will be one there. Presumably they're going to wait and see what happens to the economy. If everything drowns and falls down in the first quarter of next year, I suspect that will be a generous scheme again. Okay. It's worth pointing out as well is that the deadline for the last grant, which was a 70% of trading profits, is still open, and you've got days to make your application if you haven't already. Okay, so if you think you do qualify and for some reason you've missed this, or you've not received a letter from HMRC, or you can't figure out how to do it, just get in contact with your normal sort of client manager or partner here, and we'll be happy to just point you in the right direction of how to make that claim, because you have days left. After that data's gone, you can no longer make a claim for any of the previous periods. Okay. It's also worth noting you didn't have to claim under the previous grants, but as we will see now in the qualifying criteria, you may not have claimed for the previous grants, but you must have been eligible for them. Okay, which means you probably should be making a claim under that October 19th deadline if you haven't already. Okay, so let's just whiz through this and remind ourselves what you had to do to qualify. So you've got to be self-employed. So we just visited what that meant. You must have lost profits due to COVID-19. This is a declaration you have to make. Okay, and only you may know that, and it might be, as the HMRC released a number of examples of what lost profits might be, or it could be from unable to work, it could be lack in demand, it could be lacking supply chain, any of these sorts of things. If you've been impacted and trading profits weren't as good as they could have been, that would qualify. An important one that was very important for the first round of this scheme was that you must have filed a tax return for the 18-19 year, and you had to have done that for this extended, they gave us extended deadline by 23rd of April this year. So if you haven't done that, or you weren't self-employed in that period, then you don't qualify for the scheme. So HMRC doesn't have your data, or the data they're using to base the administration of the scheme, they don't have it, so you don't qualify. Okay, it's not for large self-employed businesses or individuals, so it's capped at £50,000. So £50,001, you just do not qualify. It's not tiered, it's just on or off. Half of your income must have been self-employed. So if you've got a job, if you've got a PAYE job and you do something on the side at the weekends or what have you, to be able to cover that profits, that must have been at least half, if not more, of your total income in the year. Must have been eligible, as I said before, and actually a new one here as well. So you've got to be able to declare that you're currently actively trading and intend to continue to trade. And what that basically means is you need to declare that you're not bust or going bust. So the government are under a lot of pressure to not support ghost businesses or zombie businesses that shouldn't really be here now. So the observations have been made that our economy now has permanently changed. You know, next year is hopefully going to be better than this year, but it's not going to look a huge lot different. So the government wants to make sure it's not supporting businesses that can't actually survive in the current economy. Okay. And when you get these slides as well, you can click through to the online portal. So there is an HMRC portal to go and make your claim, but obviously we can point you in that direction as well. But remember, we can't make the claim on your behalf, and the government have smart things that check IP addresses and things like this to make sure that we're not doing that for you.
There's a question come in from Tessa Holmes, who's asking, is there any support for self-employed or sole trader whose business is not in profit but is still trading?
So that's an interesting one. We can pick that technically and maybe touch and base that afterwards, but I think not, because it's actually based on the profits, average trading profits that you'd usually have. So if you're a loss-making business and you think you would continue making losses anyway, I don't think you'd qualify. So that's actually quite an outline, the question, but we can pick that up afterwards and actually take a look at the rules a bit more closely and deal with that if you want to.
That's all.
Good question. Right, so changes to taxation and loan schemes. So these are less about schemes and more about just some quick changes the government have made. So the first one, so remember back in March to June this year, if you had your VAT quarter ended in that period, your VAT payment due, then you didn't have to pay it. You could defer it all the way over to March 2021. And probably with the foresight that everyone's going to queue up in March 2021 and ask, hey, can I have a 12-month payment plan, please? The government's decided just to make that the standard. So everyone will have a 11-month or 11 equal installments to pay that liability. Now, I've had bunch of questions from clients over the last few months of, I've got the money now, things are okay. I'm just going to pay that 20, 30, 50, 100,000 pounds VAT bill and get it done. I can afford to pay it. And my advice nearly always is don't do that. Okay, so we're going into a period of uncertainty. So the final quarter of this year, we've got all sorts of government policies being shot out every other day that could change how your business is able to trade. We've got a very, very weak economy, and we still don't know too much around what's going to happen with the coronavirus vaccine, which will be probably the point where things do change a bit more permanently for us. So looking at uncertainty ahead, it's much better to have those pounds in your bank rather than HMRC's bank, because it's a lot harder to go and get a loan when you really, really need one than in a time when you don't need one. Okay, so I definitely encourage you to use those payment plans. Obviously, make sure you're aware where those liabilities are. Cash flow it out, so that when you do have to make those payments, you can make them. But certainly don't make those payments early unless you are absolutely and entirely flush with cash and don't see any uncertainty, which is probably unlikely. Right. The next one is that for those of us that pay your taxes by self-assessment, we were allowed to miss our July 31st payment, our on-account payment this year, which means that in January 2021, our payment of tax is going to be that much bigger because we didn't make our on-account payment in July. Again, a bit of foresight, knowing that lots of people are going to be queuing up and saying, hey, can I have a 12-month payment period? For those people who've got a liability of less than £30,000, you will automatically be allowed to spread that over 12 months. Now, I suspect that if your liability was £30,001, you could still negotiate a 12-month payment plan. You just won't get it automatically. So I don't think it's there's a view one way or the other. We've seen nothing yet that shows that HMRC won't negotiate any other amounts. Okay, so if you will struggle to pay that on January 31st and have a £35,000 liability, still talk with your client manager or tax manager here about helping you get a time to pay arrangement if needed. The last bit, VAT, so VAT rates. So we had the very generous cut from 20 to 5% for our very badly hit hospitality and tourism sector, so pubs, restaurants, cafes, etc. That's going to continue to March 2021. And just because we have had questions around this, you don't have to pass that saving on to the customers. So you could keep your prices the same and take that as margin, or you could pass it on to customers to attract more demand. It just entirely depends on your business model and also your cash needs in the business. And we've seen both. We often see large customers making a big thing about, hey, look, we're passing it on to you, but small businesses tend to keep that themselves to bolster cash flow when demand has gone down. All right, so the loan schemes. So CBIL, so our coronavirus business interruption loan scheme, a mouthful, and the business bounce back loan scheme. Both now are going to run to the end of November, so 30th of November. Now, it's worth noting that a few things here. So we've had another spike in sort of demand from clients needing a lot of help to get CBILS loans in particular, and that I think the main driver there's two main drivers I see for that. So one, the non-bank lenders, the funding circle type institutions out there, have really got their act together now and are processing loans relatively well and relatively quickly, where a few months ago it was just all change overnight, and banks are scrambling around to figure out how do we actually assess and issue these loans. So it should be, I hesitate to use the word easier because it's not easier, but it should be a smoother process now to get those loans, and people are recognizing it. But the second thing that we're seeing a lot happening is that people are realizing you're able to refinance existing loans into CBILS loans. Okay, now the government have spotted this as well, and so they've put a limit on lenders' ability to do this. And lenders are allowed to have up to 20% of their CBILS loan portfolio as refinance loans. But if you're able to get into that 20%, it's very beneficial. So you get to take advantage. You might have a loan outstanding, maybe a £300,000 loan. So it fits within the CBILS range. As long as you meet the criteria for that, you could then take advantage of the interest-free period, a capital repayment free period, potentially also removal of PGs, of personal guarantees, depending on the size of the loan that you've got. Okay, so it's definitely worthwhile assessing that if you can. And we've been scrambling around, particularly we've done a lot. It's fun, I think a lot of funding circle stuff we've helped with in the last month or so, as they've been very keen to get people to refinance their loans into CBILS loans as well. Other points, you've got longer loan terms for both the CBILS and BBLS loans, but that's just the maximum terms, not necessarily the terms that are set up. Borrowers under the BBL, so the Business Bounce Back Loan Scheme, also have had some additional neat little terms that help protect you later on to ensure that you can pay back the loan if you continue to struggle over the next year. So you get chances to delay interest payments. So you can do you can do interest only payments for a period, and also you can do pause whole payments to do capital repayment holidays as well. Okay, so the banks are going to obviously probably assess and just talk with you when you do this. It's not clear to us yet how you would talk to your bank manager or switch that on and off yet, but the government are pushing that as that's a policy that's going to apply to bounce back loans. So if you do struggle to repay them later, this should help. Okay, so that's it for our loans and our tax changes. So we're into the final sprints now, as we look at some of the more periphery schemes. So Dan is going to unpack for us the Kickstart scheme, which is the scheme targeted at helping not just businesses, us as business owners, is beneficial for us, but it's largely targeted at helping young people leaving university or finishing education in some form to find and get jobs in a very difficult economy. So Dan, over to you.
Sure. So as John said, part of the Chancellor's plan for jobs is to create this Kickstart scheme, which basically provides businesses with funding where they're willing to create these 6-month job placements for 16 to 24-year-olds who would otherwise be on universal credit. Now, what the government has said is that they will cover placements under this scheme where an individual works 25 hours a week for 6 months or more. So 6 months being the bit that will be covered by the government, up to 25 hours a week. The individual can work hours around that as long as they work that minimum of 25 hours a week for 6 months. And similarly with wage, the national minimum wage is what the government will pay, but you can pay them more than that. And the employer's national insurance and pension costs will also be covered by the government. Once you set up the scheme and you've got your first employees on, the government will pay you a 1.5K grant for every employee that you have on the scheme. And that's to cover the onboarding cost and having these people on your payroll. And in particular, this is another scheme that is running through the PAYE system. So it's very important they're set up on your proper payroll or your formal payroll. Now, this isn't just sort of cheap labour, and you will be expected to provide some degree of formal training to each of the employees on the scheme. And that's where you see that keyword there on there as employability support. And it's likely that DWP will be in contact with both the employer and the employee over the period of their placement to check that some form of training is taking place. And it almost goes without saying, but this scheme is designed to be creating new jobs, so it's not to replace current vacancies or existing jobs. And what will happen is once you're registered under the scheme, local job centres, which are aware of the levels of people on universal credit, will come to you and present suitable candidates, at which point your interview process or the process by which you hire these people is entirely at your discretion. So whether you employ these people is totally up to you. It's just being presented through these job centres. Credit. Perfect. And one of the other key things that we've seen announced as part of the scheme is that the scheme is to be eligible for all businesses. There's no threshold or no cap, and similarly on the number of places. So a business, small or large, can offer as many placements as it chooses, provided that it's still willing to provide this training or this support to develop them. From an application perspective, unfortunately, the government is making it harder for the smaller and medium firms who don't offer at least 30 places. So if you are offering 30 placements, you can apply directly through a government online portal. But if that you fall below that, so you offer 10 places, 20 places, what the government's asking you to do is to pull together. So asking small or medium firms to pull together to form a group and then apply. And what we've seen happen is the creation of these sort of Kickstart gateways, which are organisations such as recruitment agencies or local authorities who are doing this for small and medium firms. So that they're taking several firms and pooling their applications together to make an application through the online portal. One of the things about that's quite key in the government guidance is that the gateways, if they are helping onboard your employees and they're helping set up these things, then that 1.5K setup grant that we mentioned on the last slide may be split. May be split between you and the gateway. So you have to reach some form of arrangement with your gateway or whoever it is that's helping you do that concerning that grant. And as I mentioned a minute ago, it's really important that this scheme is running through PAYE, so that you must be on the formal payroll of the company despite only being there for 6 months.
Just to add in there, when it's really worth emphasising that the government have put a lot of literature out there, really pointing at, this is a scheme to help young people find jobs. It is not a scheme for small business or large businesses just to create pools of temporary and cheap labour. And I mean, it's we'll obviously yet to see how the government are going to kind of enforce their viewpoint, but they do reiterate through all of the stuff they're releasing, saying you will be checked, you will get a call, we will figure out whether you are trying to create pools of cheap labour or you're actually generally trying to build jobs and with what Dan mentioned, create an employability, like growth opportunity for the individuals. Okay.
Absolutely.
John, can I just ask something on that? So we've got quite a lot of small businesses on the line. Should they be keenly looking at this and trying to form a gateway, or is it not really for them?
So for me, the sort of rule would be, is this something we would usually do? So are we looking to bring on sort of apprentice type individuals? Is that something that works well in our organization, or is that something that we've thought about doing? So if it is, then it's definitely worth exploring, because it's something that you would have thought about doing and it'd be useful for your business and your business of this sort that can actually meet all those criteria. If you're approaching this going, well, actually, I could do with some cost savings, or could this be a way of getting some funding from the government to help support my margins when demand is down? If that's the camp you're in, I'd say that it's probably not worth looking at. Would be my viewpoint.
Cool. So next on the list is to talk about some of the local lockdown measures. As everybody's seen over the last week or two, the government has created this 3-tier system for marking areas of the country that will be forced to close, or businesses in particular that will be forced to shut their doors, and employees who have no accessibility to working. So there's been a couple of schemes or changes to existing schemes come up in response to that to help support businesses. The first on screen, as you see there, is an expansion of the job support scheme that John mentioned earlier. So for employees who are unable to work because their business has been forced to close, then the government will reimburse 2/3 of their normal pay, up to a maximum of $2,100 a month. So unlike the main job support scheme, where there was obviously that threshold of working a minimum of 33% of your hours in order to earn any government support, this is obviously specifically where employees are unable to work or told that they are legally not allowed to go to work and their business is not allowed to be open. And the grant will be worth, as I said, sort of 2/3 of your normal pay. And that the wording there of normal pay is quite ambiguous in government guidance. So we're awaiting further guidance to really sort of define exactly what normal pay will be.
But it's likely to be assessed under the similar rules as the furlough scheme.
Exactly.
Furlough. Yeah. And it is effectively the halfway house between the new job support scheme, which is not particularly generous, and the old furlough scheme, which is very generous. And we saw, Dan was pointing out, we saw Rishi Sunak come under fire from some reporters talking, why are people not worth what they were worth before? And it's which is not a very good question really, because ultimately this is about trying to extend what we can as a country now, what the Exchequer can do, and just supporting people, be very pinpoint in helping them support only those specific jobs that where they can't go back to work, but should be sustainable jobs at the point. It's not about putting worth or value on people, which is a funny question.
We've just had a question in from Raj Panasar saying,
Hi, Raj.
Talking about this topic of forced to close. So he works in events and conferences. So he hasn't actually been forced to close, but he can't run his events and gatherings. So is he eligible for this?
That's an interesting one. I mean, from my understanding, it's likely to hit those businesses such as cafes, pubs, etc., who are legally not allowed to open. But I suppose an events business where events that were scheduled to take place and are now not allowed to take place would possibly fall into that. So that's probably one that will take a bit of investigation, because again, this was only announced sort of the end of last week. I think it was Friday.
There certainly seems to be a sort of geographical bound around it, and which is going to be a very and Raj, your business is beyond just a single geographical bound. So it's going to be interesting to see how the government want to enforce it. So if Liverpool's being told to lock down, is it just businesses that are in Liverpool, pubs serving there, or is it businesses that would have otherwise run an event in Liverpool? It's not clear.
Absolutely.
Okay, so pick this one up with your client manager, or make a note of that, Raj.
I think so. Yep. So moving on to cash grants that were also announced last week. When initially announced, actually they were a lot smaller than what you see on screen. They were initially sort of about half the levels that they are now. But Rishi announced last week that with the increase of local lockdowns and the likelihood of local lockdowns being greater, lots of these businesses were going to receive these cash grants if they are similar to above, businesses that are legally obliged to close, so cafes, pubs, restaurants, etc. And the size of the grants that you will receive will be determined by the rateable value of your property. So just like the retail, hospitality and leisure grants that we had earlier in the year, the rateable value of your property is the value at which you would pay business rates tax. So for businesses who have a rateable value of less than £15,000, that will be £1,300 per month. For less than 51,000 but greater than 15,000, we have grants of 2,000 a month. And if it's over that 51,000 rateable value threshold, then they will receive £3,000 a month. And the way these grants will be distributed is via your local authorities again. So again, similar to the retail, hospitality and leisure grants that we had earlier in the year, various different local authorities are different speeds. So some are very quick at processing this and getting the money out to those businesses who were threatened and who were at risk, and others took a lot longer. The slight difference this time, we imagine, will be that these grants will be paid on a fortnightly basis. So it won't be a single instalment for businesses affected. It will be grants every 2 weeks in arrears following you being forced to shut for 2 weeks.
It's also worth pointing out it's unlikely to be a grant that you apply for. It's going to be a grant that's applied automatically, particularly as I don't see any ability for a local authority to process applications and put stuff over 2 months, which is why using the business rate system is useful for local authorities because they've got all the data and bits there around who should be paid what. However, saying that, as we saw in the last round of grants that were based on rateable value, there were people who fell through the cracks and didn't receive what they had, what they were due, and they had to contact the local authority and go through the circus then of forms, calls, and all the rest to get hold of their grants. So I suspect this will happen to some degree again. And as always, then is what my advice to business owners is: don't count on these sorts of grants as being part of your cash flow. They may be late, or at least assume that they're going to be later than they say they are. Right.
Absolutely. I think
That's that.
It. Yep.
Great. Let's finish the screen share here. Okay. Well, that brings us then to the main content. So, I mean, Rosie, have we built up a log of Q&A that's worth us picking up now?
Had a couple of questions. I think it was a very comprehensive presentation. I had a couple of questions submitted before the webinar, so I'll just cover off those. We had one from Sarji Matthew, who says, regarding the Kickstart scheme, does each placement have to work 25 hours per week, or could they work part-time? In other words, could I have 2 placements whose total working hours are 25 hours per week?
Do you want to pick this up, Dan?
Yeah, sure. I'm happy to pick that one up. So, to my understanding, the 25-hour threshold is per individual on the scheme. So, as long as an individual is in training for 25 hours per week or working 25 hours a week, and they qualify. But unfortunately, 2 individuals working 12 hours or 4 individuals working 6 hours just wouldn't be enough.
Okay.
Just remember that the main focus of this scheme is, again, not to provide cheap labor to businesses, but to provide the right opportunities for young people who are struggling to find those first jobs at the moment. So it's very, very unlikely that you'd be able to do that, or the rules would be written such that you'd be able to do that.
And we had another question pre-submitted from Gavin Howard, who's saying, if I have to make an employee redundant due to the government's handling of the virus, is there any compensation scheme for employers' financial obligations towards the employee?
So not that we've been made aware of or has been released at the moment. And if you sort of think about the direction and the angle of the government initiatives and what they're trying to do, they're trying to incentivize businesses to do whatever they can to retain individuals. So we've got we'll give you £1,000 per employee that you don't make redundant. You know, we're doing an extended job support scheme to try and avoid redundancies and use part-time paying. So I think it's very unlikely that the government will extend reliefs and/or grants to help you make people redundant. I think actually it works quite well for the government to have redundancy costs being quite expensive as a disincentive to do that. So I wouldn't expect that would be the case.
Yeah, great, thank you. We just had a question in about the slides. So yeah, the slides and the recording will all be sent around this afternoon, so don't worry if you missed the beginning of this. And we had 2 questions, one from Andy Shaw, who's saying he thinks he's in the category where he doesn't get any support. So he's a self-employed recruiter. His income is based on commissions, success-related commissions. As an LTD company director with dividends who works from home, has no office space, he thinks that he's not entitled to anything. Is there anything we can help there? So,
I mean, this is a question we had a lot of, over the last 6 months, and that it's like if you are, you call yourself self-employed, but technically from a tax perspective, you're not self-employed. If you've got a limited company, you are an employee. You're an officer, a director of that limited company, and you're a shareholder of that limited company. So you get awarded shares, which is distribution of profit, and then you probably get a small salary, a tax-efficient amount as an employee of that limited company. So you do, and unfortunately fall into that gap, which is a really difficult place to be. And from the government's perspective, that's what the loan schemes we're trying to cover is that, we're forcing or enabling, whichever way you look at it, enabling banks to make very cheap money available that limited businesses, and in fact, actually any business is allowed to access bounce back loan, whether you're a sole trader, LLP or what have you. And it's kind of they're sort of catching net, the be all catch all, and say, hey, look, you can get up to 50 grand. You don't have to pay anything back this year. It's interest free, capital free for a year, and then you've got 6 to 10 years to pay it off. So I'd say, Andy, that your best, if you've not already done it, is your best angle for support at the moment is to get hold of a bounce back loan. It's a message that a few months ago when we were covering the initial initiatives, my message always was get hold of a bounce back loan if you're eligible. You can pay if you don't want to service that loan after a year, you can pay it off. All the loans are structured, you can pay it off early. But you could almost treat it like an overdraft. You could take the loan, stick it in another bank account, or just have it set aside in your cash flow, so that if you do need it, you can draw down, on that cash. If you don't, you could pay it back. But sorry.
Is the deadline for applications for the bounce back loan scheme?
End of November.
Yeah.
So it's been extended to end of November. So if you've not done it, do jump on that. Actually, it's also worth noting, across our client base, we get stories of banks doing it in almost hours, and then banks losing applications. And what the common theme here is, if you're making an application to a bank that you currently bank with, so if NatWest is your bank and you've banked with them for a period of time as a business customer, you should be able to quite quickly get your loan. However, if you don't bank with them, you're making a new application to a bank, we're hearing stories of it taking weeks, months, or even losing your application, having to start the process again. But it's worth trying again to get hold of it.
And just another one on the bounce back loans. I think we know the answer, that you can apply for a bounce back loan regardless of how much money you've got in the bank. Is that correct?
That's correct. It's not assessed on. So where we had you remember on the self-employed support scheme, you had to declare that you were struggling through COVID. And actually on CBILS as well, you have to show how you've been impacted with COVID but can still continue to service a loan of up to 40 million. So it's a big high end. Bounce back loans was just banks handing out cash. There is no assessment. And the idea, remember, this came from that CBILS loans took so long to process because the application was actually very thorough. You had to put together cash flows and all this rest to show that you were struggling but you were coming back. Bounce back loans are just there for you to have.
I think, just to add to that, John, quickly, that both the CBILS and the bounce back loan schemes do have a threshold though on the amount that you can borrow. So you can only borrow 25% of what your turnover is, or your sales for the year. So if you had sales of £100,000 in a year, then the maximum amount that you could borrow on the bounce back or CBILS scheme would be £25,000. Yeah.
Okay, good. I think we're out of time there. We've got a question here from Gurpreet Singh. Gurpreet, we'll pick that up with you, with your client manager after the call, because it's quite a specific VAT question.
I'll pick it up with you, Gurpreet.
Perfect. So thank you everyone for joining. The slides and the recording will be sent around this afternoon. You're also welcome to share those with other contacts you have who may have found the summary we've done today useful. We'll be in touch if we're going to do any further updates on these webinars over the coming weeks, and do get in touch with your client managers for any other specific help you need. I'm just going to do a quick poll now which asks your feedback on the webinar today, and also if you're interested in any other of the services that Acuity and the team here offer. So thank you for joining, and we look forward to speaking with you all in the future.
Great. Thank you very much. Bye.
Thanks a lot.